Hey traders, welcome back to the channel. So I'm kind of digging some of the commentary we received from a video we published about a month ago regarding big accounts and small accounts. And from the feedback, it looks like I may have missed the mark. And really, a lot of the feedback was really focusing on, hey, Mike, can I take some of the principles that big account traders use and apply them to my small account? So can it be risk management discipline, but also the strategies itself? Well, the answer? Absolutely. All right, so I love this feedback. You give them some content, and they want more. They want more. Absolutely, I'll pull the curtain back and show you really some of the behind the scenes of what goes on, with a larger account. And in this case, I oversee a family office. Now, at the end of the video, you may come to the conclusion that it's not much difference. I mean, whether it's 100 shares or 100,000, is there any difference in the process? For the most part, there isn't. But there are some things behind the curtain that you really should know about, and you can apply it to your small account trading. Let's get to the first one. All right, so the first one, and it's the most obvious when you oversee a managed account, it's all about the firm's policies, their bylaws, the charter. Right? You're really there to execute the plan of the entity. And that includes strategy, especially if the strategies are scalable. So one of the strategies we teach our members, we use the exact same protocols and rules on the managed side. Click on the link below. We'll give you all the information. As long as the strategies are scalable, it can apply to a larger account, managed side, or even a smaller account. All right, next. Documentation in your journal is brought to a totally different level on the managed side. The analytics is over the top, sometimes too much minutia, to be honest with you. But what I try to do is extract key pieces of data, primarily optimization. Where should that target be? A lot of times you say, on the small account side, 2-to-1, or do you use 1-to-1 or 2-to-1? On the managed side, we want to get that optimization over a large sample in different markets. So the analytics really play a big role. But quite honestly, a regular trader with a small account can do the exact same analytics. All right, next, I want to kind of reiterate what we talked about a few weeks back. On the managed side, it's all about portfolio delta. We're really looking to see what's the exposure, whether it's long, short, too much size on maybe one industry or a commodity. We're really not that concerned with individual trades. And also the outcome of individual trades. We're constantly looking at that portfolio delta. What are we exposed? Do we have too much long, too much short? Maybe we want to be too much long and too short. Maybe we do. Maybe we just want to be neutral in certain events and things like that. So what we do very differently is we're constantly looking at that portfolio delta. What's going to be the impact of, say, a 50-point move in the S&P futures? What will that have the impact on the portfolio or the open positions that we have right now? We're really not concerned about individual positions. Next, and we kind of preach this to our traders. You are paid to execute a plan within the charter of the firm. You're paid to execute. The things that happen outside of your control, we really don't care about. All right? We have controls in place regards to size. We talked about portfolio delta, but we're not going to worry about it if you have a bunch of losers in a row and they're just things out of your control. We know that a lot of the randomness results in streaky type performance. But as long as we're monitoring compliant trading behavior, again, according to the charter, we're okay with it. Really don't see a problem at all. In fact, our big concern is the trader sort of getting discouraged over something they had no control over. So that's where we want to kind of, give that hand holding to make sure they're focused, because once they lose their focus, then you'll start to see the execution compliance go down, and we don't want that. All right, next, the reporting is pretty much over the top. I mean, it's almost ridiculous about the level of reporting that has to be done. And even if for a private firm, like a family office, there's a lot of stakeholders, a lot of hands in the cookie jar. And quite honestly, from a consulting side, this is how I really generate a lot of my consulting revenue, for handling a lot of the reporting. I mean, let me just go through the list of the people who have their hands in the cookie jar. Accounting, okay, got to make sure they're happy. The owners or the partners of a firm, okay, we want to be transparent with them. But sometimes they have legal representation for them. So they won't really attend, say, a meeting, but their attorneys will. All right. And quite honestly, they really don't know the trading business. So you got to do a lot of hand holding. And honestly, sometimes they just need to justify their existence rather than just say, oh, okay, okay, okay. They need to like, well, what about that? Or what about this? And I just kind of shake my head. And, it's ridiculous. The family office representatives, some of the staffing that gets involved. So they may say, okay, we did a back test and this is why we optimized this particular strategy. Well, they maybe want to see the back test. Well, who do they want to talk to? The person who did the back test. Well, who's that? One of the traders. Well, I really want to pull them from the desk. Well, but then they have to go. Now they have to prepare a summary for them. And so it's a little bit minutia. The lesson learned here, being an individual trader is the coolest thing in the world. But I want you to bring some of the reporting to the table rather than just documenting in a journal. Try to find out some of the things that you can optimize in your trading. But I have to tell you, some of this reporting is totally over the top. All right, next, I'm going to kind of pull the curtain back a little bit. If you think window dressing isn't a thing, think again. Now, really, the simple definition of window dressing is after a certain period, whether it's the end of a quarter or particularly at the end of the year, you want to show your results. And sometimes, you may want to ease up on the gas pedal if you had a really good year and you want to sort of lock in those gains and lock in those numbers rather than take a chance and all of a sudden maybe the last month or so or last few weeks, hell breaks loose and all of a sudden you have like a break-even quarter and you have to kind of explain it. Now, I'm a big compliance execute. If there's alpha and opportunity at the table, I'm here pushing the button. But in a managed setting, the window dressing is real and we want those numbers to be, as nice as possible and sort of keep the questions to a minimum. To answer one of those questions is, do you do window dressing? Absolutely on the men's side, yes. All right, the last two I want to mention. Cost containment, that's a real thing as well. Just like any firm, you're always looking at the expenses of the firm. After all, it is either partners' money or outside capital, and you want to manage that appropriate. A lot of the firms will have sort of rules and restrictions on, hotels and airfares and things like that. But for the most part, they want to encourage productivity. But at the same time, this isn't about the $20,000 steak dinner every Friday night. It's not. It's real business with real expenses. And I'm going to throw this last one in here because I know it's true. When it comes to the trading side, you're really only as good as your last trade or your last week. Sometimes when I see a trader on a really good run, I start to get a little concerned. Of course, the risk manager, is always concerned about something. But I say, oh boy, it's like he just raised the bar. Now he's got to perform that all the time. And it sounds like nothing. And we try to just encourage you, again, execute the plan. That's all you can do. Control what you can control, like I said earlier. But when you have that good run, all of a sudden now the expectation level, at least psychologically, gets higher. And it may not be from the trader, but from the partners in the firm and things like that. When you have that board and you see like, we don't have individual trader ranking. We like to keep it more of a family type atmosphere. But when you see that performer who's consistently doing it, they're going to have a setback. I mean, it's just the math. But we don't want it to hurt their sort of ego and also their confidence and psychology. But it's real. It happens. We have to find a way to address it. But yes, it is looked at as, oh boy, like this guy just raised the bar, or, this girl just raised the bar. And how do we explain it if they have like a little setback? I was like, hey, what happened? Well, it's normal math, but it is kind of something we chuckle at. We try to address it at the firm level, but some partners are just, a little pokey, like, what's going on over there? So it is what it is. All right, so I hope you got a small glimpse of some of the things behind the curtain. Again, from a small account perspective, really, a lot of these principles are the same. In fact, I could really conclude after doing this for a while, I think it's much easier as an individual trader. You don't have to worry about all the crap, all the reporting, all the minutia, but you are your own firm. Remember that. And you need to be accountable for your actions and also your reporting and your ability to be compliant. Create your own charter. Again, it's your hedge fund, right? It's your small hedge fund, but one day, hopefully, it'll be big. So make sure you have that structure in place without all the BS that some of the risk managers have to do at the firm level. All right. I hope you got a little taste of this. Hope you enjoyed it. Let me know what you liked, let me know what you're not going to use, and we'll see you at the next video.